Hey, what is going on, SMB Nation? It is me, the birthday boy. It's my birthday, everyone. We're 27 here. We getting old as hell in this bitch. Um, well, the market gave me exactly what I was looking for. If you guys watched my video yesterday, you knew I was talking about downside. I was talking, look at this setup. Look at this perfect rising wedge on the S&P 500. Look at this level that we're right up against. Look at this trend line that we're right up against. Look at this 200-day moving average that we're right up against. All signs pointing down, and sure enough, what does the market give us? We break out of this falling wedge, and we just hemorrhage. We go down big time. So, looking here at the 15-minute chart, this was just saying, I mean, this was picture perfect. This is like one of those like trades where it's like such a base hit, such a it's like you're playing T-ball and you're Aaron Judge, you know. It's like this is just too easy. We get a perfect double top right up here at 400. Double top off of this little box. Look at this. I mean, look at the supply zone I drew up. I told you all about that. Look at that supply zone. Like I said yesterday, I said we got to get above that supply zone. If we don't, we're just going to go back down. And sure enough, what happens? So that's another thing that happened today. We get this PPI news, producer price index. We get PPI that is so low. It's coming down so fast. This is the biggest drop in producer price index that we've had since the pandemic, since COVID started. That is a massive drop in inflation. Fantastic drop in inflation. About a 0.5% month over month, I believe. Let me check that real quick. But that's a huge drop in inflation. I mean, you can ask for anything else. Wholesale prices fell 0.5%, much more than expected. Retail sales fall as well. So that is huge. A sharp drop in energy prices helped the headline inflation reading down this month. The PPI's final demand energy index plunged 7.9%. Retail sales fell 1.1% in December, slightly more than the 1% forecast. So the PPI news is fantastic, or so you would think. Remember, what did I tell you guys? I told y'all. I said inflation is not the whole story right now. Inflation, we know it's going to come down because gas prices was such a huge driver in that goods inflation and all that food inflation. And now we know gas prices have fallen sharply, heavily. So with this massive inflation news, you would think, right? Wouldn't you think when this whole bear market started because of inflation, that once we get news that inflation is coming down, wouldn't you think that we'd be seeing some good price action to the upside, some bullishness? Well. You obviously don't watch SMB trading when you can, because I was telling y'all when we got that Thursday reading on the CPI that was negative month over month CPI, or no, was it 0%? No, yeah, it was 0%. It wasn't negative. When we got that fantastic CPI news and the market did this, it did nothing. And now we went up a little bit. We went down a little bit yesterday, and the market went up like 0.5% on the S&P from fantastic CPI news. I told y'all, this is God, you guys got to subscribe. You're missing out if you haven't. I told y'all that CPI news was so good. Why is the market doing nothing? Why are we not going up off of that? And look at the last CPI. The last CPI was even better than the one before this one, or than the last one, but the market just went straight down from there. So this is all backing up my thesis on the fact that inflation is not the only thing the market is looking at right now. It is more so looking at what happens 3 months from now when gas prices have flattened and inflation doesn't have that, or CPI doesn't have the gas prices pushing it down. What happens then? Then we just stick in this 5%, 4% CPI inflation, PPI inflation range, where we just stagnate because the gas isn't the one pulling it down. The only thing pulling inflation down right now is the gas prices. Demand has come down on things like flight and travel, but not very much. And we know demand for services hasn't come down at all because that inflation is still going up. Service inflation, your haircuts, your car washes, your oil change, yada, yada, yada. Services, and that's what the Fed knows. The Fed does not look at goods inflation nearly as much as it does service inflation, wages, labor, because they know goods inflation is usually transitory. I know transitory, that's a spooky word. They know that gas prices were going to come down, and they knew that would help. But they like that it's coming down. They're obviously glad it's not going up. But there's just a lot more of the picture that people are missing. And what did the market do today? I mean, just the perfect birthday gift. Look at this. I mean, just look at this daily candle. A monkey, a child, a 5-year-old could look at this chart and tell you this is like Such an insanely bearish day. So look at this volume. This volume is crazy on the S&P. It's almost as high as the volume that we had back here on CPI day. Fully engulfing candle with a tweezer top, a double top on the daily candle, and a massive red candle that wiped out the past 3 days of green. Or about the past, like, yeah, yesterday wasn't green, but look at this. This one candle is bigger than these past 3. Bigger than the past 4, actually. We've taken 4 green days worth out in one day, on a day where we got insanely good inflation news. So what does that tell you? You cannot be this delusional to look at this and not, like, obviously see how bearish this is. I think this was just a really bad bull trap, frankly. People were buying a lot of calls. There was a lot of puts getting bought on this ride up, but a lot of calls as well. And those calls are just, they're done. Sayonara. After today, the market makers just ate up all that premium, man. I mean, sheesh. But that's what they did back here, too. There were so many puts loaded up back here this week of the 12th. So many goddamn puts getting grabbed. And what does the market do? It goes sideways and then it goes up. RIP those puts. So we know the market's just going to do whatever causes the most pain to the most people involved. And sure enough, it did that. Looking at the Nasdaq. So the Nasdaq, if we look at the hourly, has just a picture-perfect head and shoulders. We got our head right there, or our shoulder right there, head right there, shoulder right here, with our neckline right here at this key level at 277.82. And it looks like we just closed for the day. Officially, the S&P is down about 1.5%. Nasdaq down about 1.25%. So tech holding up better, but that is mainly because of Apple, which is only down 0.5%, and Google, which is only down 0.5%. But Microsoft, 2%. Amazon, I think, is only down 0.5%. So a lot of these mega cap tech companies weren't down a lot today, but I imagine they will follow. The Dow Jones is down heavily. So that's what I've been saying that before as well. The Dow Jones has just been carrying the market. I mean, the United Healthcares, the Caterpillars, the John Deeres, the J&J, all these stocks, or the McDonald's. All these stocks have been going up recently, and now look at J&J. It's falling off a cliff. Look at McDonald's, man. I mean, McDonald's has just been going. It's at all-time highs, but today it fell off a cliff as well. So I imagine banks. Oh my God, banks too, man. Look at banks. They've been going just straight up since October. Banks have just been grinding straight up since October, and now they're finally coming down. Look at Wells Fargo. Sure enough, all the banks. They're a little red. Wow, Morgan Stanley skyrocketed off those earnings. 6%. Shoosh. So let's look back at the Nasdaq. So the Nasdaq, we get that good PPI number. We come up, and sure enough, the Nasdaq has fallen out of this rising wedge, just like the S&P. And look at this level. I told y'all about this level here. If we look at the 5-minute, we can see. So I said, look at this level, 279.50, and I wrote even right there, I said calls if we bounce. So I was prepared to load up on calls. I was prepared to buy the dip on that. If we bounce off of this level, and the market tried to, and then it rejected it hard. High volume on that rejection, and then look at this, perfect, picture perfect. It rides up, it tries to re-break that level. So now we know that level is resistance. Where that level was one support back here, you see this support, 279.60 to 58 range. This was support. Now that level is now resistance. Very bearish. Very, very bearish in my opinion. High volume everywhere. Look at the volume. Look at that volume. Uptick in volume from the day before. I mean, I don't know. I don't know what to tell y'all. This is just like, God damn. So I got to talk about what I'm expecting tomorrow. Now tomorrow, this is almost such an obvious setup to the downside that I think tomorrow we can get like a pretty big green day to shake a lot of people out of puts that I know people, well, you can just look at options flow. People were loading up on puts today. People have been loading up on puts this entire ride up, which is also a huge red flag that I was looking at the entire time. Now, I even tried to get some Nasdaq puts, but I was getting Nasdaq puts over here. I was too early. That's why you got to be patient. I was being impatient. I was trying to buy the top or trying to sell the top. But I was patient this time around, and I waited for confirmation. If you look at the 30-minute, you can see we got a sell signal on the system. The sell signal came, so this is why the system is so money. I mean, look at this. You get a sell signal right there. That candle crosses over. It crosses over that green line. Buy a put. Look at that. You get you get 1.5% drop off that, basically. I mean, from 396.70 straight down to 391.60. I mean, God damn, this freaking system. It's almost impossible to lose money with the system, man. And I'm just so impatient that I need to just follow the system because there's just so money. I mean, that's just way too easy. So like I said on the S&P as well, this support at 393.62. I said if we broke that, then I'm looking at puts. And sure enough, I did get a put for March. So I do not believe tech has bottomed. I mean, maybe the Dow Jones is bottom. Maybe the S&P is bottom. I do not believe the Nasdaq has. There's just no way. Valuations are still way too high on the Nasdaq. And I was telling y'all, look at Apple. I know I'm going to say that a million times. But like I said, I was looking at Apple. Apple has been holding up nicely. So, but it really hasn't gone up that much. I was saying, usually Apple leads these rallies. It usually has big bounces from 134 straight up to 157. It usually has these big, very fast bounces. And what has it been doing this entire time? The Nasdaq, it has been lagging the Nasdaq basically. The entire time the Nasdaq has been rallying over here, it's barely gone up like 8%. Meanwhile, the whole Nasdaq went up like 8.5%. It's been behind the Nasdaq. I said that was a big red flag in my eyes. So Apple looks really good to the downside. Amazon looks fantastic to the downside. We bounced. Look at that. Fuck, dude. I just only have a moment here. No. I know I'm getting a little too excited. I'll tone it down, boys. But I just said, look at this channel. I would not be surprised if Amazon bounced right off of that channel. And sure enough, the rising wedge fed right to the top of that trend line. And we get big sell orders coming in. So Amazon looks great to the downside as well. Google, not so good to the downside. I imagine it could hold up a little bit better than everything else. Microsoft, sure enough, bounced right off that 204-hour moving average, that yellow line right there. Where's the daily? 50-day moving average as well. So Microsoft looks great to the downside. I mean, just everywhere. You look all around tech. Microsoft has freaking... I mean, look at that trend line, dude. It's just... That's how easy trading can be sometimes. If you're very patient, you just have to be very, very patient because this took about 12 days. I mean, like 8 actual trading days, but 12 days of real life time. It took 12 days for this trend to follow through. So you just had to sit and wait and wait. You could play calls to the upside. That's fine. But if you were looking for downside, you had to be very patient. You cannot force the downside because the momentum just builds on itself and it can just be going up and up and up. And I took a little loss on an Apple put and I learned that lesson. So you just got to be patient to the downside. And if you were, you're rewarded greatly because this is just so simple. This trend line was so simple. Just break it, grab a put on Microsoft, and it dumps 2%. So that's why I am holding some Nasdaq puts for March. I have about 70 days on these puts. And if we look at my risk to reward, I have my little risk to reward box right here. It's a perfect trade. The risk to I'm going to cut my losses if we rip up. If we rip up above probably 287.50, maybe now let's do 286.50. If we can rip above that, come above this trend line, then I will cut that put for a very small loss. But you can see the risk to reward is about 5-1. I mean, come on, that's what trading's all about. Risk to reward. You're never gonna win every trade. All you can do is control your risk and just trust the price action. God, this price action is just so money. So the Nasdaq actually held up a little bit better than the S&P 500. That is a little curious. I kind of told you why. I said it was Apple was a little lagging. Google held up pretty good. Amazon was only down like 0.5%. I think these tech companies are just going to be a little slow to the downside. But yeah. Anyways, looking at Coinbase. Coinbase just fell off a cliff. All these Bitcoin stocks, Mara. Not Era, but Mara. Mara fell off a cliff also. So shorts are stepping back up. Look at that. It's right up against that trend line. Shorts are stepping back in right now. Sellers are back. And look at Mara with that perfect doji on the top too. But if we look at these daily candles, I mean, Apple has a huge wick to the top, closed at the bottom of the candle, super bearish reversal candle. We look at the S&P daily. I already told you that is like, God, that jumps off the paper. I mean, that's like... It looks exactly like these candles we had over here. Look at that. Where it just opens and goes straight down and closes near the bottom. When you see these candles that close when there's no wick on the bottom, they are super bearish, especially when they're at the top of a super bullish just impulse rally. So let's look at what else we got going. I know my energy is a little higher on these days where I'm right because I was I've been saying it, and it sucks. You know, you always you'll miss out on the upside if you're always looking to the downside, and you'll miss out on the downside if you're always looking to the upside. So I try to be a little unbiased, but I mean, I just could not help myself. I really couldn't. I was just looking and looking at what the market was doing in reaction to this inflation news, and I'm just like, this is just not adding up, man. Because CPI reports are so massive. Look what a CPI report did back here in June. I mean, the market looks at them heavily, especially if they come in worse than expected. Same with back over here, CPI day, straight down. Or no, right there, 13th of September, we fell like 4.5%. Over here, we fell about 2.5%. I mean, CPI reports are impressive. Important to the market. So, also on the Nasdaq, I gave you guys this key level. I gave that key level yesterday. I said, look at this box. I said, look at these rallies that we've had in the past. Back here, early October, we rally, reject right here at 284.50 area. Then at the end of October, we're rallying. We go straight from 250 all the way to 284. Where do we reject? 284.50 to 285 area. This rally, look at where we rejected. I mean, come on. Look at that. It's just freaking too easy, man. If we look at NVIDIA, so NVIDIA has a very good setup to the downside right now, in my opinion. NVIDIA has had a crazy rally to the upside, but I am anticipating, looking at that TSM earnings report, I am just really anticipating that semis are going to get hammered this next earnings. I think it's going to be... And NVIDIA has done that already this last year, where they already reduced their earnings expectations, but then they come out before earnings and they go like, guys, we reduced them last time, but we were actually way off. It's actually way worse than we thought. So NVIDIA has already done that last year, and we know as time goes on, these interest rates just get worse and worse on the consumer and the whole economy. So it's not crazy to assume that NVIDIA could do the same thing, or their earnings could come in as a huge miss to the downside. And the fact that NVIDIA has just gone straight up from here, it's just like, come on, man. And we're right up against that trend line. We hit that level perfectly that I gave you guys yesterday, right there at 177.60. Hit that, big wicks to the top. NVIDIA looks really good to the downside. Same with AMD. AMD also had a perfect rising wedge, broke out of it. Now it's going to the downside. I'm not shorting semis. I'm just shorting the whole Nasdaq. I don't really want to try to pick a stock that's going to go down right now. I'm just confident that tech in general is going to go down. So that's why I'm just going to short the Nasdaq. Buy your time. You got to buy time. These next 3 days could be just like sideways. We could just chop around in this range. I guarantee we might. That doesn't make any sense. I guarantee it's very possible that we just chop. We bounce here at 278. We chop back up to like 283. We bounce back down, chop up, chop down. You got to buy puts that have time on it. I'm telling you, you got to get March. You got to get April, even June if you want. You got to buy time on these contracts. You cannot try to assume that we're just going to drop 10% over the next 5 days. You got to pay for that time. I know it makes the contracts more expensive, but you got to buy them, because tomorrow could be a like 1% up day. We could bounce right here, bounce straight up to like 281 tomorrow, just to get people to panic sell out of their puts that they bought today. I wouldn't be surprised whatsoever if that happens. I also wouldn't be surprised if we just go straight down tomorrow again. But you have to pay for that time, because you could just get absolutely smoked. They could roll you up and just smoke you, dude, if you don't buy the time. So you got to buy the time. But yeah, that's really the gist of it. Just an all-around red day, just everything. I mean, just everything. It's hard to let's look at the FinViz heat map. I imagine it's just everything. Yep, just look at this. Just everything's red. Everything. mRNA was green. That's the greenest thing. Hey, Qualcomm was a little green. Just everything was red. So, Meta. Let's look at Meta. I believe Meta has a really good setup to the downside. So there, look at that level. Perfect on Meta. Perfect on Meta. So Meta is clearly in this channel. It has hit the top of that channel, and you see the confluence. This is why I always talk about confluences. If you see a trend line just in the middle of nowhere with no moving averages, no other significant levels around it, then it's not that reliable. But if you see a trend line like this, like at the top of a channel, and you see this confluence where it's also sitting right on top of a very important level, and 137.50 is so important on Meta, because you can see back here we've just rejected off of that multiple times. Look at that. You see that? That was resistance, and that still is resistance. There's still sell orders waiting up here. We rejected off of it hard right there. So it's basically just from right here all the way over. And, oh, let's look at this. Let's see. I don't know where the price action is. I'm just going to drag this box along it, and I'm sure, oh, yep, perfect. It is just right there. How easy is that? So Meta looks really good to the downside. And I see a nice, oh, man, Meta. Come on, dude. Look at that. God damn. Just with a nice little rising wedge right there on Meta. Inside the channel. I mean, come on, dude. That's just so pretty. So I'm almost a little worried about how excited I am for this downside because of it's just like so obvious. Everything just looks so stinking good to the downside that it could be a big bear trap. But that's why you just got to keep your risk small. You know, I'm willing to take a little tiny like 0.3% loss on the account if it means my upside is potentially 300%. So that's all you can do as a trader. Trust the price action. Trust the setup. Don't be like, oh, this is very high conviction. That's bullshit. When you're like, when you tell yourself, oh, this is very high conviction, that just means you're less willing to admit that you're wrong about something. And that is not a way to trade. You can be like, this is a very good looking setup, but you cannot be like, oh, I like this setup because I know it's right. That's how you get smoked. That's how you just get rolled and smoked, man. You cannot do that. You have to be able to admit when you're wrong and just take the loss. Don't take it personally. The market, it's not personal. It's robotic. Just don't take it personally. But yeah, that's what I'm seeing, guys. So let's look at some levels for tomorrow. Tomorrow, I imagine we could see the Nasdaq yank straight down to this level. 27. No, wait. Huh? That's all right. Yeah, 275.50. I could see that for the Nasdaq. We could see a bounce at 276. But tomorrow, my price range for the Nasdaq target 274.30. That's very doable. If we break below this level right here, if we break below this level at 273.50, I mean, it's sayonara. We're going to see 260 very soon after that. We do have a little gap to the downside on the Nasdaq. For the S&P 500, we have a massive gap to the downside that we are in the process of filling right now at 390.50. So we could see a bounce off this level at 390.25. But if we do just slice right through that, we have to look at where we were in this range back here. Got to look at this level. Yeah, look at that level. It's perfect. Perfect. Got to look for that at 387. But below 387, we're back in this range. And then we still have this trend line up here. So we could see a bit of a confluence. Look at the confluence. We might just bounce right there and go back up. But that's what I'm seeing right now, guys. Thank you for watching. I appreciate you. Please drop a sub if you enjoyed. Please drop a comment. If you took any of my advice and you were looking to the downside, you're smart money. Dumb money was buying calls up here just being like, yep, recession's over. If you're super bullish on this run up, you believe in fairy tales and unicorns, and you think Cinderella's real, you got to give your head a shake. But thank you for watching, guys. Bye.